There are new people entering the investing world every year, and understanding all of these statistics around especially shares can be a bit confusing. So through this video, I'm going to be talking about what each of these different values mean, as well as how you can start investing in shares today. Hello everyone, I'm Tom and this is Tom's Funny Magic. And before we get into the nitty-gritty of the world of shares, I want to first talk about what shares actually are. So what are shares? Shares are fractions of ownership of a company that has been listed onto a stock exchange, which is a place where companies can submit parts or all of their company to be listed onto so that people can buy into that company and help fund its future. The share value is connected to the company value, as by buying shares, you are giving the company more money to grow and showing your belief in the company. Due to the liquidity of shares, or the fact that they can be easily or quickly bought and sold, means that the share price can be pretty volatile, changing depending on how many people are buying or selling shares. You can buy any number of shares from any company that is listed onto the stock exchange, meaning that you can invest some of your spare money or all of your savings. You also don't have a lack of choices, as you can find shares of all types, sizes, from every industry and from most countries. By owning a share, you may also earn some passive income. This form of income is called a dividend, which is where some companies may pay their shareholders a fraction of their income as a thank you for investing in them. Other, usually newer companies may not pay dividends, and this is usually because they want to use that income to then help fund their growth. This can commonly result in the share price rising faster than if you had received dividends, as the company has more money to grow. Now, what in the absolute heck do all of these numbers mean? So when looking up a share for a company, you'll see lots of different numbers underneath the graph. These show the different properties of the share, and I'll be going over these from simplest to most important. The most straightforward numbers are open, high, and close. Open shows you what the value of the share was when the market opened for that day, usually around 10 a.m. in the time zone of the market that the share is in. And high shows you the highest value for that market day, and close shows you what the value was when the market closed for that day, usually around 4 p.m. of the time zone of the market. The next ones to look at are 52-week high and 52-week low. These values show you what the highest and lowest value of the share was during the 52 weeks that it has last been on the market for. You can also see what the market capitalization is, which is the value of a single share multiplied by the total number of shares. This will give you an estimate for how much the company is worth. You will also be able to see volume and average volume. Volume shows you the amount of shares that have been bought or sold in the last day that the market was open or the current day. And average volume gives you an average for every day over the last year. Yield gives you a percentage, showing how much of a dividend people were paid last time they received them, calculated by dividing the dividend per share by the share price at the time. You can find an estimated figure for a future dividend by multiplying this percentage by the current share value. Beta tells you how volatile your share is when compared to the overall market. 1 gives you a volatility around the same as the market. Anything less than that will mean that your share is less volatile than the overall market, and anything higher will mean that it's more volatile. The EPS, or earnings per share, gives you a sign of how profitable the company currently is, calculated by dividing their net income by the number of total shares. Meaning the higher the number is, the more profitable the company currently is. The final value is the PE ratio, or price to earnings ratio. It gives you an insight into what other investors are doing. If this value is high, it means that the share is either overpriced or that other investors believe in the future of the company, meaning that they believe that the value and earnings will go up in the future. If you are older than 18, starting your own stocks portfolio can be as easy as just setting up an account with your provider of choice. You just have to make an account, and then once you have, you just load it up with a bit of money, and then you can start investing in any share that you want. The only fees that you will encounter is when you are trading shares, which is either buying or selling them, and this value will change based on how much you are trading at any given time. Under $5,000 will give you a fee of around $15 to $20, between $5,000 and $10,000 will give you a fee of around $20 to $25, and the other ranges and fees can be seen on screen now. When trading shares, you'll be able to specify either a certain amount of shares or a certain amount of money for each trade. You can also automate it by making it automatically buy or sell shares if the share price goes above or below a certain value. This can help you optimize the price that you are buying or selling at, as you don't have to be next to your computer waiting to hit enter when it hits a certain value. But what if you're under 18? In this case, you can start investing by using your parents. Your parents could set up an account for you for an investing app. An example of these is one that I used to use myself, called Raise. This app automatically splits up the money that you input into several other ETFs depending on what risk level that you choose. And the only fees that you will encounter is a monthly fee of $3.50. And if you ask your parents nicely, they may agree to split this 50-50 with you. Another way that you could start investing is through a sort of pretend stock market, which is where you would pay your parents the correct amount for a certain amount of shares and then write down what the share price was and how many shares you bought. That way you can keep track of it in the future. So your parents don't have to fork out extra money just because you made some good stock choices. You may want to add in an extra limitation to this pretend stock market. This limitation is that you can only purchase shares that your parents also own, and in this way, you are just buying those shares off of them. That's all for me today. Please hit the like button down below and subscribe for more content. Feel free to check out my other videos and website if you want to learn more about finance. See ya!